high-low method is a cost analysis technique used to determine the fixed and variable portions of mixed costs. This method is particularly useful for businesses that have mixed costs, which consist of both fixed and variable components. By utilizing the high-low method, businesses can gain insight into their cost structure and make more informed decisions regarding pricing, budgeting, and forecasting. The first step in the high-low method is to gather data on the total costs and corresponding activity levels for a given period. The high point and low point of activity are identified, and the total costs associated with each of these points are recorded. The high and low points represent the periods with the highest and lowest level of activity, respectively. Once the high and low points have been identified, the next step is to calculate the variable cost per unit of activity. This is done by subtracting the total fixed cost, which remains constant regardless of the level of activity, from the total cost of the high and low points, and then dividing the difference by the difference in activity levels between the high and low points. The result is the variable cost per unit of activity, which can be used to estimate the variable portion of total costs at any level of activity. After calculating the variable cost per unit of activity, the fixed cost can be determined by subtracting the total variable cost, which varies with the level of activity, from the total cost at either the high or low point. This leaves the fixed cost, which remains constant regardless of the level of activity. Finally, once the fixed and variable costs have been determined, they can be used to create a cost function, which represents the relationship between total costs and the level of activity. This cost function can then be utilized to make predictions about future costs based on different levels of activity. In conclusion, the high-low method is a valuable tool for businesses seeking to gain a deeper understanding of their cost structure. By following the step-by-step process of identifying high and low points, calculating variable and fixed costs, and creating a cost function, businesses can make more informed decisions and improve their overall financial performance.